So where can you hide out to maybe avoid more Fed-induced pain? Let's welcome back our friend and contributor, Gina Sanchez, Chief Market Strategist at Lido Advisors. She's got 3 buys that could take the Fed pain and one name to bail on here. And Gina, welcome. Good to see you again. Listen, one thing we just talked about going into the break was Eli Lilly, and here's the sad part. When COVID hit, we locked down, half the country locked down. We literally told people do not go outside. It was exactly the wrong thing to do. And tens of millions of Americans gained significant amount of weight. Eli Lilly has got some promising new drugs to tackle what is no doubt a crisis, obesity crisis. One reason you like that stock?
It's a big reason I like that stock. In fact, we're talking this morning about their Alzheimer drug, but I think the obesity drug is even bigger. This is a drug that's coming on the back of a couple of incretin drugs that have come out, but their drug, Mounjaro, is basically promising to top even the best results that have come out in terms of clinical trials. It's been approved for diabetes and is on the docket to be approved for obesity. And the drug not only is effective, but it also reverses, things like diabetes. It reduces heart risk and all sorts of other things that are eventually expensive down the road. So this is a big market for them. I think this is a huge win. And Eli Lilly is, quite frankly, a company and in a sector that people really need to continue. They're not going to stop buying their drugs because we're in a recession.
All right, moving on. Walmart, your next 3 buys. The stock's been hit like everything else. But again, you kind of wonder, is this counter-cyclical? I mean, things get tough. People trade down. Some people will maybe trade down to Walmart.
Absolutely. This is stuff that's affordable. If the one thing that I don't believe that the Fed is going to be able to do is effectively bring down inflation. So many components of inflation are way out of the Fed's hands. You look at what's happening with oil, what's happened what we heard about with the Nord Stream. That news is nothing that interest rates will make a difference on. So we could actually be in an inflationary environment even when we're in pain otherwise, and people are going to want to trade down. They're going to want to buy cheaper. Walmart is able to do that, but Walmart also has an incredible ability to manage their inventories. They have an amazing ability to manage their costs, to manage their logistics. I mean, this company doesn't have $559 billion in annual revenues, because they do things wrong. They do things right, and this is a company that can still do well.
That is not an unsmall amount of revenue. All right, and stock number 3 is a name that you have brought to this network, you've brought to this segment before. Hasn't responded yet, but I mean, honestly, looking 5 years out, Microsoft's not going away. I wish Excel would, but Microsoft is not.
Microsoft's not going away. And here's the other thing is when times get tough, the digital imperative gets even greater. Companies have to do more with less, and that's what technology is about. Also, strangely, Microsoft can compete on price. This is a company that is so diversified in what it is offering. It has also bought so many components of things that we might have paid for separately. Teams displaces Zoom. They have their own CRM, displaces Salesforce. So they are able to compete on price, ecosystem, and wait this out. So this is a long-term play for us. So yeah, it hasn't responded yet, but we think it's still a long-term play. This is one I own personally, and I love this stock.
Okay, own personally, love the stock. All right, I don't know if you remember your bail, the Gap. You remember years ago their tagline was "Fall into the Gap." Well, I mean, investors have. Right? I mean, the stock was $35 a couple minutes ago. It's 8 and change now. Disaster.
Yeah, it is a disaster. And I mean, the characteristics of the Gap, so, if you're sort of looking for things you want to stay away from, this is a company that is highly indebted, had very little cash on hand, cash and cash equivalents, didn't have much free cash flow, very little interest coverage, and it's not even that cheap. I mean, that's the crazy, well, now it is, but, it really, given where it is on its balance sheet, it doesn't have a whole lot, and it's not the sort of thing, you don't need another Gap sweater when you're in a recession. So that's the problem that Gap has, is they just aren't really, they don't have enough extra cash, they just don't have enough of anything and a lot of debt. This is a tough time to have debt and no cash.
Certainly is. Gina Sanchez, 3 buys and a bail. Gina, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.